Welcome back, folks. Hope you're doing well. In the last video, someone commented, your quality is not good enough. I record on my phone. I just got a camera. I just don't know how to use it yet. So once I figure it out, it's over for all the bitches. And yeah, I got a camera too. So now I'm invested, okay? Okay, coming back to the topic. Today we're going to learn about Bollinger Bands. I personally don't use Bollinger Bands for trading, but a lot of beginners use Bollinger Bands. I used to use it as a beginner, and it works pretty well for day trading. And I don't use it now because I grew out of it. But if you're a beginner, you can try out the strategy and see if it works for you. I even though I don't use it,
Don't think, why is this bitch wasting my time then if she's not using it? Right?
I just wanted to teach you basic indicators because when someone is referring to Bollinger Bands, you shouldn't think like, what the hell is it? I don't even understand what is going on, right? So that's the reason I wanted to teach you the basics first before we delve deeper into serious topics in trading. Okay, so you need to understand what Bollinger Bands are, what MACD is, what moving averages are, what relative strength index is, etc. Okay, so now let's get into the topic and learn about Bollinger Bands. Okay, so now let's get into the topic. Okay, Bollinger Bands are technical analysis tools used to measure volatility of financial assets price movement. They were developed by John Bollinger in the 1980s. So before we get into the topic, I just wanted to show you how you can add this indicator to your chart. Click on this indicator and type in Bollinger Bands and click on this one. The first one with no strategy, whatever. Click on the first one, Bollinger Bands, okay? Don't click on any other indicators. Click on this one, simple Bollinger Bands, or you can use anything. Okay, it doesn't matter. All you have to have is an upper band, lower band, and a middle band. Okay, so let's cut it. So this right here is the Bollinger Bands. You can use it on any time frame. I'm gonna remove MACD indicator. So okay, so this looks like a wave, right? So let me explain how it works. You can use it on any time frame. You can use it on daily, weekly, 15 minutes, 5 minutes, or whatever time frame that you're trading. One person commented that they don't know which time frame they should be trading. If you are an investor, you should be using a different time frame for charting. And if you are a trader or a day trader, scalp trader, you should be using different time frame. I'm going to go over that in the next session. I'm going to teach you which time frame you should be using, where you should be planning, where you should be executing, etc. But for now, just understand that you can use it on any time frame, whatever time frame, depends on what kind of trader you are. It could be a swing trader, scalp trader. You can use it on any time frame. Okay, and how to read it. Bollinger Bands consists of 3 lines. Okay, the middle band is a simple moving average, typically a 20-day moving average. The middle line is the one that is going through here. This is the middle line. Okay, and the upper band is plotted 2 standard deviations above the middle band. Okay, so the middle band, you have standard deviations here and you have standard deviation here. We have upper band and lower bands. Okay, the lower band is plotted 2 standard deviation below the middle band. Going back to the settings of this one, go to the settings, click on it, and you see you can change the length if you want it. Okay, so go back to different time frames and check how it works. And how do you use it? The key uses of Bollinger Bands are to identify overbought and oversold conditions. Okay, just like you use relative strength index RSI, this helps you identify when it is overbought or oversold conditions. I'll explain you when we get into the chart again. And you have when prices touch the upper band, the asset may be overbought, and when they touch the lower band, the asset may be oversold. Okay, so this is what they mean. So when the candles are touching here, it is overbought, and that's when people sell it. And when it touched the bottom, it's oversold, and that's when they're gonna be longing. Okay, and Another one is they can signal the start of a new trend when the prices break out of the Bollinger Bands. It may indicate the beginning of a new trend. What do they mean by that? You see, now it is, it is converging into a smaller Bollinger Band, right? Here it is expanded. It means that it's going to be volatile. It's just going to go up and down, right, like that. Or whenever it is like consolidating, the Bollinger Bands are going to be shrinking, and it is just going to move up and down within a small range, okay? And they can signal the start of a new trend. When price breaks out of the Bollinger Bands, it may indicate the beginning of a new trend. See, it is going out, right? So it indicates that it is going out to a new trend, consolidation and breaking down, right? And then here, let's take another example. It was consolidating and then it moved up, right? So it indicates change of trend. The width of the Bollinger Bands reflects volatility. See, when the Bollinger Bands are wide, the price is volatile a lot. When it is, like this, they can signal, when the band tighten, it suggests low volatility. See, it's not that volatile, right? It is just ranging when it is like this. And a potential upcoming price move, whenever it shrinks or tightens, it means that it's going to break out up or down. It doesn't mean that it is going to go down or it's going to go up. It just means that it is consolidating for the next move. Whenever it consolidated, it went down. Here, let's take another example. It consolidated and it went up, right? So whenever it consolidates, whenever it tightens, you know that it is gonna break out or break down, okay? So that's all you need to know. Let me explain how people use that for trading. Let's go 15 minutes and let me explain how people use it for trading. I personally don't use it at all, but a lot of people use it for trading. They use it in conjunction with Fibonacci, because you cannot use one indicator for entering or exiting a trade because it's never going to work. Okay, there is no magic indicator that works 100% and going to give you 100% results. If that's the case, everyone is going to use it, eh? So all you need to know is that no indicator is perfect, but they typically work like 50-60%. If this is your strategy, you can still work with it if you're managing your money properly, okay? So what you need to know is how you can enter and exit a trade. So here, you place an order, a long position, when it hits the bottom of the Bollinger Bands, okay? And you target whenever it touches the top of the Bollinger Bands. It is still 2%, right? Good enough. And when it reaches the top, you take a short position and you target the touch of the Bollinger Band low. That is still 1.43, and your stop loss is above the previous wick. And that's like risking 0.34%. Still pretty good for a 15 minutes chart, right? 2%, 1%, you can still scalp that. It does work. But the challenge here is that, see, if you have taken a short position here on the 15 minutes chart with a stop loss here, you take profits here with 3%, pretty decent, okay? But you're gonna miss out all of these if you are trading short term and not taking profits with Bollinger Bands, okay? It only works on the lower time frame. It does not help you with higher time frame trades. Like you can use it on 4-hour chart and use the same exact strategy. See, you can enter a trade when it hits the top of the Bollinger Bands and risk 0.86%, pretty decent, and you can take profits when it hits the bottom of this one, 8%, pretty good, okay? But not every time it hits the top and bottom of the Bollinger Bands. That is the reason people don't use it often. But whenever it hits, it does work, okay? You can still work with it. Okay, the homework today is to apply this indicator to different charts and see if you can formulate a strategy and work on trades, like go and back test. This is how we back test. Click on replay, click on that, and let it do it. Let it do the magic. See, it's now bouncing off of the Bollinger Band, right? Now place an order right here. You place a long position with a stop loss here, and your target is gonna be top of the Bollinger Band. Okay, so now let's see how that works. So when it hits the top, you're gonna, okay, so it hit the top, right? So your trade hit the top of the Bollinger Band right here. You risk 21% for 11%. That's the challenge of using Bollinger Bands. Like, you wouldn't be able to get a proper target until it occurs. This is why they call it lagging indicator. You wouldn't be able to determine the target before it hits. You have to make a decision after it hits. This risk reward ratio is not even possible. You have to risk 21% for 11%. That is not something that you want to do, right? So that's the reason people don't use it for trading, but you can use it on 15 minutes. It works pretty good on the 15 minutes chart. When I was a beginner, I used to use this a lot. Then I grew out of it. I liked price action trading better. But I just thought that you should know what Bollinger Bands are, and you should have like a basic understanding of all of these indicators before you delve deeper into other serious topics in trading. Okay, I hope you enjoyed this video, and if you like this video, please feel free to subscribe to this